I just hope you guys are good and welcome to this week's segment of our market breakdowns. Now, if you're new to this channel, kindly note that every Monday at 5 o'clock South African time, I drop a weekly analysis. So if you want to profit from the signals that I share here and the setups that I share, feel free to hit the subscribe button and turn on the notification bell. Also, subscribe to my Telegram channel because that's where I share most of my other setups that I couldn't share here. So anyways, guys, without wasting any time, let's get right into it. We're going to start by looking at the dollar index, right? So we are on the weekly, and from the weekly, you can tell that there's been a shift of sentiment. So the market came down, double bottom, and now it's souring to the upside, right? Now, okay, if there's been a shift of sentiment, how do we confirm that, right? You had this swing low. It's been violated. I mean, the swing high, previous swing high from this downtrend, it's been violated. Also, the market failed to break below this area over here, right? And also, there's a gap here, meaning we have an area of supply over here. So these are your clues. Remember, on higher time frames, we don't make use of a lot of data. We just want the main trend and also key areas so that we can be able to set our profit targets. So this is what I'm seeing. From this break of structure, we found an order block here. Not a very good order block because it's a doji, but that's the order block that the market reacted from last week, right? And now we're approaching this area of liquidity over here. So really, if you ask me what I expect to see on the dollar index, I expect to see a push to the upside, a bit of manipulation over here, and a continuation. Now, say for example, this area of liquidity holds, right? Only if we break through previous structure am I going to consider that this actual movement might correct to the downside. But so far, the only confirmations that we've been getting are bullish confirmations. And okay, let's move on to the lower time frame, which is the daily. Now, like I said, we have this area over here that the market reacted from. On the lower time frame, the demand area is more clear, right? And it's nested within the higher time frame area. So this is what we see. This is where the market reacted from last week. Remember, we've been anticipating this move. I just want to show you because I'm trying to do a proper market breakdown and just not, take shortcuts with this, right? We came into this area of demand and now the market is pushing to the upside. What it has to do is violate the previous swing highs. So as you can see right here, the market failed to break above, which is why we got this drop to the downside, right? So if the market respects this high, right, that's when I'm going to consider taking the drop. But then if we violate this area, then I'm assuming we're going to continue to the upside. Now, because there's equal highs here, we can also consider this area an area of liquidity. To be specific, buy side liquidity. So it will be interesting to see what the market does on this area. But like I still maintain, I'm still expecting a push to the upside. So the market to find an order block here, and then, right? You can also tell, guys, we've been going up, correction, going up, correction. And now the market's just in its correction phase. So yeah, these are my sentiments on the dollar index. Let's move on to a lower time frame. The 4 hour, before I move on to another pay. So what I expect for the week, You had this break of structure over here, right? Let me remove this. You had this break of structure over here. As you can see, the market left a very huge blueprint with this large Marubozu candlestick, right? Remember from our videos where we talked about supply and demand, we are interested in the source of that large imbalance. And this is the source. Let me change the color real quick. And then let me move the weekly. Yeah, so it's more clear, right? You also have this area of liquidity over here where the market has taken liquidity. Let me adjust this one real quick. Right. So we've left this huge gap over here. And for the week, for the coming week, I'm expecting the market to at least try to fill in the gap that it's left right here before we can push to the upside, right? Here's an area of liquidity, so we're expecting a lot of sell orders here. So just have to wait and see. Now let's move on to another pair. Now we are on USDJPY. Honestly, I don't know why I picked this pair because it looks funny. But anyways, let's just analyze using what we know. So we're stuck in this range, right? Here's your low. And here's another low, right? This actually is a reaction from this demand area over here. Right. And also we have the supply over here, which is not a very good supply area. Why? Because it's wicky. Right? Also, there's an area of liquidity over here because the market has been stopping. Sorry, the market has been turning right here. So above this area, because a lot of retail traders expect the market to turn, so they have their sells here. There's a lot of liquidity, right? Now, above this area is the level of supply. You have this gap over here, you have the supply over here, but not really. Yeah, here's a level of supply. It's only been tested once. Let me zoom out. Meaning eventually, if we can break through those areas of liquidity, we can eventually get into this area of supply over here. Right? Now let's focus on the data that we have right now. Okay, got the strong impulse, correction, strong impulse, right? So after a strong impulse, what do you expect? A correction. That's your opportunity to enter. Now, with us looking for a correction means that we're going to look for a fair value gap. This is where the gap is. So the market can decide to tap in some of the orders that it's left here before moving up. Or it can just break through this area, break through the structure, form an order block here, and continue to the upside. So those are the two main scenarios that we're expecting to fold on USDJPY. So what if the first scenario is the one that actually prevails, right? What if we actually tap into the orders in this gap over here? How will it look on the lower time frames? Let's go to a lower time frame and see. So you have a break of structure over here. Let me just adjust accordingly. Right. Got this area of supply, demand, not really important, but yeah, because it's done its duty. So after this break of structure, we found an order block here, and then the market continued to the upside, right? As it was continuing to the upside, we had a break of structure over here, right? And with the break of structure, we had this gap going to the upside. As a result, we formed two order blocks. One here, means I can delete this one, and another one here. Now, the market can decide fairly to just continue to the upside, right? Now, why? Because it looks like a flag. Fine. That's scenario one. That's scenario 2 from what we saw on the weekly. Or if this area, the market or the orders that are resting here, the market eventually fills them, we are actually going to expect the market to drop and fetch orders from this area. So if you ask me about the wick fills and what I would expect to see, if we eventually break through this area, this is where I'm going to be placing my buy limit. But assuming the second scenario on the weekly prevails, which is this one, what should we expect to see? Now, it's very clear that this looks like a bullish flag. All right. Expecting some manipulation on this area, and then a breakout, retest. This is what I'm expecting to see. But yeah, overall we have a lot of scenarios that could play out on this pair in a nutshell. But in the long run, what I'm expecting to see is a bullish movement to the upside. Eventually, we are going to get that movement to the upside. But yeah, we just have to wait and see how this plays out. I will be carefully monitoring it and giving you guys update on the Telegram channel. So make sure that you keep an eye out for that one. But yeah, these are my sentiments on USDJPY. A lot of scenarios can play out, but we agree on the bias because remember, guys, you have a bias and then you have the actual setup. So you can understand where the market is going, but you have to also understand the phase that you're in terms of the market. And if you understand the phase that you're in, then you need to identify the appropriate setup to be able to trade the setup that you're seeing, right? If it's a counter trend, it means that it's higher risk and your chances of success are probably lower. But if it's in line and it aligns with the main trend, then your chances of success are much higher. But at the end of the day, we're just speculating. Without wasting any time, let's move on to another pair. JPY. And to be honest, I'm not going to be going too deep into this pair because you already know what I'm expecting. This is just an update, right? Remember, you have this area of demand that the market eventually has to tap into. And we are seeing that the market is making efforts to drop to tap into those orders. So that's what I'm expecting for this week. Let's go to a daily time frame. This is a nested demand area, fresh, never been tested. And that makes it a higher probability area. Right. And you also have this area over here. And I'm not sure how the market will react off this area. But if it does give us the bullish push that we need, then yeah, I'm not going to write it off. But we already know that the discounted area is the high probability area. We got into the supply area over here. This is basically where the market reacted, right? Like I said, two scenarios can unfold. You can either go into this discounted area, high probability, also fresh plus it's nested within a higher time frame area, right? Or we can go to this order block over here. These are two scenarios. Remember, we've been holding this pair. We actually entered somewhere here. So we have a position in profit. It's just a matter of us adding another position, right? Now, we have the supply area, which the market, I believe, will go to at some point. But we have to remember that the higher time frame area always wins, or the higher time frame bias always wins. And from what we saw on the higher time frame bias, we're still bullish. So this is why I'm going to be taking profits from these areas only, but then I'm not going to be entering from them because they're not aligned with the higher time frame bias. But yeah, man, this was a quick update on EURJPY. Let's move on to another pair. Yes, we were monitoring this pair. This is GBPJPY. Same thing that we saw on EURJPY, right? I'm expecting the market to tap into a significant area of supply demand. We already listed this as a low probability area, and this is a high probability area. So my question is, will the market drop to fetch orders? And I think we're expecting a similar setup also on on USDJPY. Will the market drop, meaning JPY will gain strength, or are we going to find the nearest zone and then continue with the long-term bullish push to the upside? So yeah, just wanted to interject and add on to what we saw on USDJPY and EURJPY. But anyways, let's move. It's been a long minute since we looked at AUDUSD, and I just want to do that in this video. So remember, on a higher time frame, we don't look at a lot of data because price takes time to move. So what we can see for now is that we're on a higher time frame demand area, and demand in this instance is in control, right? We have this area of liquidity over here, and we also have this supply over here. So what I think the market will do in the long run, I expect the market to go up, but it has to give me certain confirmations. One, the market has to break through this opposing supply, take out liquidity, fetch an order block, and move for me to confirm this. Because in as much as we've created new highs and new lows in the opposite direction, which is the upward direction, you haven't broken any opposing levels, right? So that's the first thing. Also, we have this area of liquidity over here, right? And if the market drops, this will be my area of demand. So if the market breaks through this area, this is the second area that I'm going to be looking at. Let's go to a lower time frame. So on the weekly, we see that the market, first of all, got into this nested area of demand, right? Let me just change the shade coordinates, all right. No, visibility is wrong. Then we got this WOW pattern. It was confirmed, right? We have a break of structure over here. And the market is creating new higher highs and new higher lows. As a result, we also formed this new demand area over here, which is a level on top of a level, not really nested, but it's a level that's been created from that WOW pattern. Level on level. And this is a nested area or a nested level. So the nested level is actually the high probability level, right? So basically what I'm expecting to see here is a push to the downside to tap in some of the orders before we can continue up. Now, if we take a look at this area over here, the reason why I don't think it can hold is because of the amount of time that the market has spent on these areas, which makes them low probability areas. So yeah, these are my sentiments on AUDUSD. But yeah, let's go to a lower time frame just to have extra piece of data, right? Level on a level. On the daily, we can see that we had a break of structure over here, right? Confirming this. And then we have a nested demand area. Now, I must say these areas aren't very good areas because of how we left these areas. Remember, a good area of supply and demand has a strong departure. And so far, the only area for me that has a strong departure, or at least a departure that's worth considering, is this area over here, right? Having said that, we can expect two scenarios. Either one, the market taps into this order block over here before going up, or we tap into the nested area before going up. If the market breaks through this area and goes in any deeper, I'm expecting a breakout from this. I'm expecting it to violate this area. But these are the two scenarios that I'm seeing on AUDUSD. So as you can see, you can look, there's a lot of price action. Price is eventually going to drop or break through this area. Also, there's an area of supply over here. So if the market does go according to how we expected, this will be our first TP. And we're going to expect some sort of a reversal from this area. So yeah, these are my sentiments on AUDUSD. On the daily, you can see that we have this supply over here that the market's reacting off. Reason why we're not selling from the supply is because of how or where it's located in relation to the higher time frame bias and also the higher time frame areas. Remember, guys, eventually the higher time frame levels win. And it's already been tested twice. Now, if you look at this congested price action, what do I say about congested price action at a significant area? The orders that are resting here will eventually get filled and the market will eventually break through that area. So yeah, some people, if you have that risk appetite, you might take the sell, but to be honest, it's at your own peril. I do believe that the market will eventually break through this area before continuing to the upside. But anyways, guys, a very clean setup on AUDUSD. Let's move on to another pair. And then on currencies, this is the final currency pair that we're going to be looking at. NZDUSD. We have this weak supply area. Why is it weak? Because of the amount of candlesticks or the amount of time that the market spent here. Right? We've tested this once. This is the secondary test, right? Now, the secondary test, we're expecting, or we should be expecting a breakout eventually, because the assumption is that orders on that area are slowly getting filled, right? We also created this area of demand over here, of which I think that's where the market will tap in the orders before continuing up. And then we have this demand area over here. So overall pattern, overall bias on NZDUSD is actually bullish, right? But we have to break through structures. Can only be confirmed if we break through the supply area over here. And if we break through the supply over here, because the market might continue to the upside, meaning it can break through here, break through this supply area, tap into that supply, and then continue to the downside. So for me to actually what's the word? For me to actually say that indeed we're in a bullish run, I'd have to see that break of structure. Right? We also have this break. So this is why I'm expecting the market to tap in some of the orders that it's left. We have this liquidity over here. So yeah, remember on higher time frames, we don't make use of large data because price spends time away either way. So we use the small data that we get from higher time frames to come up with a bias. So here you can see that there was liquidity here. And then we broken it after every grab of liquidity. Just want to remove this. So as you can see, we've broken it, but we're failing to break above. Now, failure to break above is a very strong signal, and you might want to take note of that. A failure to break above is a strong signal for a reversal, right? So I legit believe that if indeed the market is showing signs of weakness, bullish weakness, that we should be dropping soon. And if we drop all the way to this area over here, this area over here would be a high probability area because it's nested within a higher time frame area. So according to what we saw on the weekly, this is the most ideal area. But then also you have this area over here, of which the market can also tap into. So as the market was continuing going high, it created another imbalance, right here. So this is the first scenario, right? And this is the second scenario. Now, if you can look at the side over here, reason why I also said that we might not get a push that we expected, or if the supply is not strong enough, look at the amount of price action at this area. And also nested within that high time frame supply, these aren't really good areas of supply. So this is why I believe they're going to get violated eventually. This is an opposing area of supply, so we can use this for profit target purposes. Right? But yeah, this is my final pair. Let's move on to Nasdaq. I'm doing something that I haven't done in a while, which is analyzing an index. Now, most people would argue that trading indices is a lot more easier than trading currencies because of the directional bias. What I mean by this is that with currencies, you're generally trading within a range and the market can either go up and down. But when you investing in a stock, the reason why you're investing in it in the first place is because the general outlook or the general expectation of that stock is that over a prolonged period, it should increase in value. And don't forget that indices are just a conglomerate of stocks. So all the stocks that form part of Nasdaq as an index or any other index is expected to go up over a prolonged period. So because you've got your bias, you just have to understand where you are in the market right now. And you just have to identify a setup that allows you to join in the trend, basically. So meaning you can know that, okay, your directional bias says you must buy over a prolonged period, but then you have to understand that you can be in a correctional phase of the market, right? So you need to be able to identify where you are in the market, identify the appropriate setup. And if you see a scalping opportunity to take the sell, it doesn't necessarily mean you're going to lose, but you need to be careful because eventually bulls are going to get in. So let me not preach and just give you my my thoughts. We had this break of structure over here. Then area of liquidity over here. So after every break of structure, we expect a retest or retest, a retest to an order block. So, okay, let's look for the imbalances over here. Where are the gaps? We have this gap over here, we have this gap over here, then we have the strong movement here, right? So this area isn't ideal because of how it's departed away from it. So another good area is this area over here. And then finally, you have this area over here. So basically, after identifying that you've had a break of structure, you need to find potential areas of demand. And then another order block might form from here. So meaning three scenarios can prevail, right? We can have a break here, consolidation away, come back, retest this, and then continue going up. Or the market can come to either one of these two areas, tap into some orders, and then move to the upside. But we know that we're eventually going to go into either one of these areas. So assuming that we're going to be trading from this area, how will it look on a smaller time frame? On the 4 hour, it looks like this. We have this demand area over here. High probability demand area is actually the one that's a discounted area, right? So this is where you most probably going to take your position, right? Does it look any different on the 1 hour? Not entirely. Just that we have liquidity over here via the equal lows. So we have liquidity over here. So it means that if the market drops, and assuming that it drops all the way to the downside, assuming that it drops all the way to the downside, this is where we're going to tap into some orders, and then we're going to continue to the upside, right? Fetch some liquidity, And then this is actually where we're going to place our entry. Assuming the market plays out exactly how we're expecting it. I'm not a huge fan of indices, but I know that a lot of y'all monitor it. So yeah, this is what I'm expecting to see. I have the breaker structure over here. Also, let's appreciate that the market can also find orders here. So it's not really a done deal. This demand area is also broken through opposing structures. So we have these two areas, but the one that's high probability is the discounted area. But anyways, guys, this is all I have for you guys this week. Hope you guys enjoyed it, and I'll see you guys in another video. For now, if you haven't subscribed yet, make sure that you subscribe. Make sure that you drop a thumbs up, and we see each other again in another video. Peace.